Hi everyone, this is Victor here. Welcome to the Intelligent Investor channel, where you will learn about stock investing and personal finance that will help you become a great investor. In today's video, I am going to talk about, is NIO stock overvalued or is it still a buy? I am going to cover these topics in this video. First, why did NIO stock skyrocket 935.57% year to date this year? Second, is NIO stock overvalued? Third, what is NIO's long-term growth outlook that may drive the stock even higher? Fourth, does NIO have any competitive advantage? And what are the risks? Fifth conclusion, is NIO stock still a buy? Now, if you like this video, remember to hit the like button and subscribe. I will post many great videos about stock investing and personal finance that will help you become a great investor. Let's start. First, why did NIO stock skyrocket 935.57% year to date in 2020? The biggest reason was that there were substantial cash investments into the company between April 2020 and June 2020 when the stock was at the lowest point this year because of the pandemic. According to management, they said they had strategic investors, meaning large institutional investors, invested in the company in Q2 this year. NIO received 5 billion in RMB from its strategic investors. Also, NIO completed an offering of 72 million American depository shares at the price of $5.95 per share in June 2020. This gave NIO $428.4 million of cash to operate. NIO needed the extra cash because the company is still losing money every quarter, as shown in the latest Q2 2020 earnings. The upcoming Q3 2020 earnings will be released on November 17th, 2020, so it will be interesting to see if the company is generating positive cash flow from operations. Otherwise, we can expect the company to raise more cash via stock offering or debts. The second main reason NIO stock skyrocketed this year is that the market believes NIO will become the next Tesla, or at least NIO has the potential to become the next Tesla in the Chinese market. If you look at the stock chart here, you will see a large amount of capital buying into the stock, represented by the green bar since June 2020, before the company reported its Q2 2020 earnings this year. Now, when the market anticipates NIO to have blowout earnings or have large vehicle delivery growth each month, the stock must increase because of the market's optimism in NIO. If you look at the Q2 2020 earnings ended on June 30th, 2020 report here, the company reported 10,331 deliveries in Q2 2020 compared to 3,553 deliveries in Q2 2019. This is a huge 290% increase. But in Q1 2020, the company delivered 3.79% fewer vehicles compared to Q1 2019, mainly because of the pandemic. Then in the latest October 2020 delivery report, NIO delivered 5,022 vehicles in October 2020, representing a 100.1% increase year over year compared to October 2029. NIO's stock skyrocketed 935.57% year to date, mainly because of the substantial cash investments from NIO's institutional investors in Q2 2020 and the offering of 72 million American depository shares in June 2020. The market is expecting that NIO will become the next Tesla in the Chinese market, and also the company did have an enormous vehicle delivery increase in Q2 2020 and the latest monthly delivery reports. Second, you may wonder, is NIO stock overvalued? My short answer is yes, if you compare NIO's latest vehicle delivery at the market cap of 56.8 billion at the time of making this video with Tesla's vehicle delivery when Tesla had a market cap of 56.1 billion on May 29, 2017. If you look at this table here, NIO has a market cap of 56.8 billion. NIO delivered 12,206 vehicles in the 3 months ended in September 2020, increasing by 154.3% year over year. Tesla had a market cap of 56.15 billion on May 29, 2017. Now, in comparison, Tesla delivered 2 times more vehicles when Tesla had a market cap of 56 billion. Tesla delivered 25,051 vehicles in the 3 months ended in March 2017, increasing by 69% year over year. If we compare their vehicle deliveries at the same market cap of 56 billion without looking at their revenues and gross margins, I believe NIO is more overvalued than Tesla. But to be fair, NIO's latest vehicle delivery is growing at a much higher rate than Tesla, when Tesla's market cap was at 56 billion. Third, what are NIO's long-term growth prospects that may drive the stock even higher? NIO's biggest tailwind right now that may drive the stock even higher is that there's a huge demand for EV vehicles in China now. Right now, China is the biggest EV market in the world. The Chinese government is giving credits and encouraging companies such as NIO, Li Auto, BYD, and Xpeng to sell more EVs. The Chinese government is investing a lot in EV infrastructures such as charging stations and is providing subsidies to customers buying EVs. The Chinese government wants to become the global leader in electric vehicles while reducing carbon dioxide emissions in the country. Also, if you look at the current global trend, according to Bloomberg EV Outlook 2020 report here, this report predicts that EVs will hit 10% of global passenger vehicle sales by 2025, then rising to 28% in 2030 and 58% in 2040. The Bloomberg EV Outlook report also states sales of internal combustion passenger vehicles peaked in 2017 and are in permanent decline, but the fleet keeps growing until 2030. Now, by 2040, there are just under 500 million passenger EVs on the road, out of a total passenger vehicle fleet of 1.6 billion. This means about 31% of the world's passenger cars are electric, but some regions go much higher, with China and parts of Europe at over 50%. Here's what William Li, the founder and CEO of NIO, said in Q2 2020 earnings that indicate NIO's strong demand in China. He said, "We want to increase the production capacities because of the strong demand in the market. Many of my friends have asked me to check whether it's possible to have their ES8 delivered earlier. So there's a very big ES8 order backlog right now." I believe NIO's vehicle sales such as their ES6, EC6, ES8 electric SUVs will continue to grow for at least the next 5 years because there's a huge demand for EVs in the Chinese market right now. You may also wonder, does NIO have any competitive advantage? Right now, NIO is still in the beginning growth stage. Outside of China, not many people know about NIO electric vehicles. But in China, NIO is much more well known. NIO does not own its manufacturing plants, not like Tesla, and NIO has to outsource to JAC Motors of China to manufacture all their cars. Therefore, I don't think NIO has a large competitive advantage right now, other than its more well-known branding in China and its network of 158 battery swapping stations in China. In recent years, William Li, CEO and founder of NIO, has done an excellent job marketing and expanding NIO's vehicles. The ES6, the EC6, and the ES8 luxury EV SUVs. I believe that NIO will start having great competitive moats once the company has a larger network of battery swapping stations in China that allow NIO customers to drive their cars into the NIO swapping stations, which will swap their battery in 3 minutes. Right now, NIO has 158 battery swapping stations in China, and the number is expanding. Many customers buy NIO cars to take advantage of their battery swapping stations. What is NIO's biggest risk? NIO's biggest risk is the enormous competition in China. According to BBC, there are more than 400 EV manufacturers in China. The EV market is very competitive in China. Most EV manufacturers, including NIO, are losing millions every quarter. If you look at the latest top plug-in vehicle sales chart in September 2020 from Clean Technica, you can see there are many EV brands you have probably not even heard of before. Tesla Model 3 was the #2 best-selling EV vehicle in September 2020. NIO ES6 was the #11 top-selling plug-in vehicle in September 2020. If you look at the top 20 plug-in vehicles in China from January 2020 to September 2020 from Clean Technica, NIO ES6 was number 7, and Tesla Model 3 was number 1. Conclusion, and is NIO stock still a buy? In conclusion, I cannot predict whether NIO will become the number 1 EV maker in China. I invested a few $1,000s in NIO, less than 1% of my stock portfolio, before making this video. Even though I think the stock is overvalued compared to Tesla, when Tesla had the same market cap of $56 billion in May 2017. I personally believe NIO will continue to benefit from the enormous demand for electric vehicles in China for at least the next 5 to 10 years. If NIO continues to improve its electric SUVs and keep expanding its battery swapping stations in China, NIO will have a much larger economic moat or competitive advantage than other EV manufacturers in China. I believe Tesla will remain the number 1 EV maker in China and in the world for many years to come, because Tesla's current branding, EV tech, battery tech, gigafactory, full autonomous driving, and the number of followers are far ahead of all other competitors. For example, Tesla's current full self-driving beta is at around 4 to 5 years ahead of most competitors out there. Now, if you want to invest in NIO, remember to do your research first and always invest with the money you don't need. Diversify if you want to reduce risk, and wait for the price to drop so you have a larger margin of safety. Now, if you like this video, remember to hit the like button and subscribe. I will continue to make many great videos about stock investing and personal finance that will help you become a great investor. This is Victor from the Intelligent Investor channel. Thank you for watching.